All right, guys, breaking news. Housing prices are actually set to drop in the current landscape of the housing market. Mortgage rates have, of course, surged, and these are to levels that haven't been seen in more than 2 decades. And that's naturally cast a shadow over the aspirations of both home buyers, but builders as well. And they're now faced with this sort of depressing reality that home builders are finding themselves compelled to take really drastic measures. They started slashing home prices, and they're now in this bid to revitalize a housing market that's been grappling with very sluggish sales. According to the Wells Fargo Housing Market Index, builder confidence in the newly built single-family housing market has seen a steady decline for the 4th consecutive month, and it's reaching its lowest point now in over a year. And all this occurs at a time when soaring home prices are squeezing out potential buyers from the market. Now, of course, the root of all of these challenges lies in the high interest rate environments that have been brought about by the Federal Reserve's aggressive stance against surging inflation. As interest rates climbed, the cost of borrowing for both home buyers but also builders has risen, and that's cast this shadow over the entire real estate industry. So in today's video, I want to dive into the details of this complicated situation and shed a little light on the challenges that are faced by the housing sector and the strategies that are being employed to adapt. Now, despite the current hurdles, there are actually signs that are suggesting that relief might be on the horizon. So stay tuned because we're going to dig into this. Now, I do want to welcome you back to the VIP Financial Education YouTube channel. My name is Matthew. I've been here for 13 years teaching you guys how to go further, faster financially. Now, we all know that the housing market has been tough. And that's, of course, because of high prices as well as high rates. And that's combining to make housing affordability the worst that it's been probably since I've been alive. And as mortgage rates have reached their highest levels in over 2 decades, home builders are being compelled to reduce their prices. And that's an attempt to stimulate sluggish sales. So builder confidence in the newly built single-family housing market has seriously declined. And according to the National Association of Home Builders, in November, it reached its lowest point in more than a year. Coinciding now with elevated prices that are deterring potential buyers, the housing sector is grappling with the challenges of a high interest rate environment as results of the Federal Reserve's effort to combat soaring inflation. Rising interest rates have continued to increase borrowing costs, and that's not just for those home buyers, but that's also for the builders themselves, and that's impacting the overall market. In November, although the average proportion of builders reducing prices remained steady at 6%, those that lowered prices to attract buyers rose from 32% to 36% over the past 2 months. Additionally, U.S. home prices surged by 3.5% in October of 23, and that's compared to the previous year, reaching a median price of over $410,000 according to data from Redfin. However, the number of homes sold declined by more than 9% compared to the same period in the previous year. Now, the increase in interest rates since late August has had a negative impact, to say the least, on builders' perceptions of the market. And this is because of a significant portion of potential buyers that found themselves unable to afford homes because of the rising rates. Additionally, the higher short-term interest rates have also led to an escalation in finance costs for both home builders and land developers. And this further compounds the challenges that are facing the housing market right now. And they've already been grappling with a shortage of available resale inventory. That's what everybody talks about. And the National Association of Home Builders suggests that there are indications that the market actually might soon see a little bit of relief, which would be awesome. Recent economic data suggests that a potential slowdown in the economy, as well as the cooling inflation that we've been seeing, could signal the end of the Federal Reserve's rate hikes. And then this in turn might lead to a decrease in mortgage rates. And the National Association of Home Builders chief economist Robert Dietz expressed some optimism here about the future. He's saying that, yes, there are challenges, but our forecast anticipates approximately 5% growth in single-family starts in 2024. He explains that high mortgage rates have constrained housing supply because homeowners prefer to stay put with their existing low-rate mortgages rather than selling and, of course, purchasing homes at the elevated interest rates. But he also anticipates a potential return of millennials to the market in the coming year because they've, of course, been detoured by the high prices and the high interest rates up till right now. And he's projecting that as mortgage rates decline in 2024, the demand that had been priced out of the market might return. He further suggests that the Federal Reserve may reduce its funds rate once or even twice in the latter part of next year. And that potentially would result in the mortgage interest rates settling in at somewhere around 6.5% or even lower by year end of 2024. Dietz also noted that the 10-year Treasury rate, which often influences mortgage rates, had dropped to the 4.5% range for the first time since late September, which could contribute to lower mortgage rates as well. And so it looks like this positive trend might have already begun. And Freddie Mac's chief economist, Sam Cater, pointed out that mortgage rates have been trending downward now for 3 consecutive weeks, citing data indicating a reduction in inflationary pressures. He believes that the combination of the continued economic strength, reduced inflation, and lower mortgage rates might attract more potential home buyers to the market. So I'm curious, what do you guys think about this? Does it look like the stars are beginning to align and that home prices will start to come down? Let me know what you think in the comments. How much do you think they're going to come down, if at all, or do you think that they're going to continue to stay the same or even go up? Affordability has certainly become a huge issue with potential home buyers. We talk about it a lot here on the channel, so any help is, of course, going to be appreciated. But I'm not so sure we're going to be seeing anything remotely close to the sub 3% interest rate era in the coming years, if ever again. We'll be sure to keep you posted here on the channel with the most relevant updates to the housing market. So make sure you subscribe if you haven't already. You don't want to miss out on future videos. Certainly hope you enjoyed today's video. If you did, it helps us a lot if you drop a thumbs up on the video. If you didn't, give me a thumbs down. Both are okay. Make sure you leave your comments and join the conversation below. Always happy to hear the input from everybody. Until I see you on the next video, make it a great day and keep on cash flowing. Take care.